Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, the 26th of October, 2021, and we're going to talk about three stories we're paying attention to, so you should be too. So thanks for watching. So let's talk about our three stories of the day, what the market's paying attention to. Number one, the S&P 500 are looking at earnings. And so S&P intraday right now is another all-time high, along with the Dow Jones Industrial Average. NASDAQ is a little bit behind, but all three averages are healthy right now based upon earnings. You know, we're in the heart of earnings season right now, and year over year, the estimate for the rise of earnings is over 35%. Again, that's unheard of right now. The amount of growth is tremendous. How are companies doing it with higher inflation costs, higher inputs, bottlenecks, a whole myriad of sort of issues? Well, it just shows that the management of these companies are able to navigate using technology and efficiencies and scalability to really grind in and grind through sort of the day-to-days and basically execute as they're supposed to. So as a result, we're seeing earnings rise and lift markets. And that's really, it's a quality thing, even though in the spite of what we're seeing right now with higher oil prices. But we'll talk about that in a second. In the meantime, let's shift to what we see here at the Investment Committee of Blanke Schein Wealth Management. We've talked about cyclicals, and cyclicals are your financials, your energies, your industrials. A few others here, like your materials, and technology is sort of on the bottom of that. But the top four are really the financials and the energy. And obviously those complexes right now, the energy complex, we have oil and natural gas at all-time highs. So therefore, naturally, year over year, we're seeing earnings and a big bounce in energy. Last year, energy got crushed, and now we're seeing it all play out right now. Now, what's interesting is the Federal Reserve, Ben Bernanke once said back in 2014 in my morning research, I found a good quote from him. He basically said that the Federal Reserve, the one thing the Fed isn't basically paying attention to back then, and that they really couldn't control, was oil and the oil prices, right? And so that's sort of the inflation that they can't control that basically creeps into the broader sort of economy, right? There's inputs, right? Just to get from A to B, all of that goods and services need higher prices built into anything that we see. And we're seeing it as consumers, whether we go to a restaurant and it's sort of the COVID surcharge, if you will, post-pandemic for restaurants to sort of make up for time, effort, energy, and money that they've lost. But also we're seeing it in sort of everything that you and I as consumers are basically paying for. In every aspect of the economy. But as Ben Bernanke said that back then, they can't print more oil because they can print more money, but they can't create more oil. So that's going to be the story that plays out. Now, what we do here at the Investment Committee is we look at other markets globally, right? To see if our thesis here in the US, let's say the S&P 500, can it make higher highs? And what sectors within the 11 sectors of the S&P 500, which ones are actually breaking out? Well, if we look at Canada, right? And so the Canadian sort of index right now, which is more amplified, they have a broader, sort of more cyclical weighting by nature of just the way that they're constructed, right? The way their economy is constructed, or the Canadian index right now. So so this is Canada relative to the S&P 500. These aren't performance returns. These aren't anything of the sort. This is basically how much more financials or how much more energy weighting do they have relative to our S&P 500? The reason why this matters, Rob, why does this matter is because we just see a breakout right now in terms of sort of the Canadian index right now. So we're seeing this empirical evidence play out, and it's basically being boosted by the overweight nature of where Canada is cyclical in nature. And cyclicals, quite frankly, are if the economy is moving forward, if it's hot, if it's basically moving in the right direction. And keep in mind, we're still reopening, right? So we're still sort of fits and starts along not only US, but around the globe. We're going back to the reopening, even though we've been shut down for about 22 months. And so what really then takes off as interest rates rise, financials take off. So there's more of a 20% overweighting in the Canadian index versus our index than the S&P 500. And we're seeing the outperformance right now in that as a result. Energy, right? We know energy all-time high prices right now, both oil and gas right now, at least for natural gas, all-time high for quite some time. And energy is not all-time high, but we're seeing a high right now that we haven't seen in quite some time. But they're overweight in their indices versus ours by 10.5%. That just means that if you're looking towards cyclicals to basically set us up to see, hey, is the economy growing? Are we now in a sort of a pull forward and reopening story. And is this reopening story real? Yeah, Canada is showing us that. That's why we pay attention to global markets, because they are skewed more towards a cyclical economy based upon their index. So it's interesting to see this play out. We're seeing the breakout. What's interesting is also they have an underweighting to technology, right? We have more technology, Silicon Valley here in the United States. Therefore, it just naturally, because of all the big tech companies, we have this. But big tech is doing really well too in terms of earnings reports. Again, at the end of the day, investors at home and our clients have to remember one thing. Earnings drive markets, right? So, and we look at around the globe, there's always an opportunity somewhere, but we always keep our eye on earnings season. So far so good. We're going to continue to monitor and report to you, but we're grinding higher as markets usually do in the face of all negative headlines. So that's our update for today. Thanks for watching and take care.